Hi, everyone. I welcome you all to the discussion on this topic, the most relevant topic, I would say, from the CA final examinations perspective is group accounting. All right. Now, this particular topic is the largest testing topic from the examination standpoint, as it covers not just one standard, which is Ind AS 103 here, as you see, but it covers multiple accounting standards, right? It would, for example, talk about, as we just saw the name, Ind AS 103, which is business combinations, but then it also covers Ind AS 110, which is consolidated financial statements, Ind AS 27, that is separate financial statements, Ind AS 28, which is investment in associates and joint ventures, Ind AS 111, which is joint arrangements. Now, all these accounting standards, all these Ind AS, would talk about the measurement and the recognition part of it, in terms of accounting and multiple terms. There would be references toward goodwill, non-controlling interest, power, control, and a lot of stuff that we're going to talk about. But then there's also another standard, which is Ind AS 112, which is addressing the needs for disclosures as well. All right. So what you see is a whole list of standards that we intend to cover as a part of group, and that's why this particular section itself is a large section or a separate section to consider, right? So we treat all these standards as a part of the same umbrella, right? So 103, 110, 27, 28, 111, and 112. All right. Now, even before we start discussing all these things, and of course there's going to be longer discussions, we will be dividing these topics into multiple sections, multiple subsections or subtopics, so that we can all appreciate what all is intended to be covered, what is the relevance of that in practical life, and of course from an examination standpoint, what are all the things that we need to all remember, right, and apply. And there are a lot of practical questions, practical workings that we'll be doing as we go on this discussion, right? So just to highlight a couple of key points, why do we need so many standards in today's time, right, to cover something like consolidation, to cover something called as group accounting, right? When I say I'm looking at a company like Facebook, for example, right, it went ahead, and of course we are all aware of it, and it went ahead and acquired the business of WhatsApp. Okay. Now there are two different companies. So there is a company one and there is a company two. And while Facebook exists today, so does WhatsApp. So there are two different companies which come together and they still operate as two different companies even today. Okay. So the group accounting would try to address multiple questions. Even before we go into accounting, the first question that starts originating, and that's why the term business combination is of great significance to us, right? So the first question that starts arising, that when Facebook is thinking of acquiring WhatsApp, okay, as a business, of course, right? The question, or the fundamental question that needs to be asked is, WhatsApp a business, for example? Okay. What is it? What is this WhatsApp all about? Is it a business or is it something else? Or are we actually talking about that, it's not an acquisition of a business, but maybe an acquisition of an asset? Okay. Because if it were an acquisition of an asset, then probably I start looking at Ind AS 16 or Ind AS 38 or Ind AS 40, you know, and the accounting requirements of those respective standards start to apply. Right. Ind AS 16, as you are all aware, is property, plant, equipment. Ind AS 30, at this point in time, we should be very comfortable knowing intangible assets. And Ind AS 40 is, of course, investment properties. Right. Now, of course, we can simply argue that WhatsApp is indeed a business. But then what makes WhatsApp a business? Are they selling something? Well, even today, and this acquisition happened a long time back. Even today, it is difficult to prove, or it's difficult to establish what is that WhatsApp is selling. It's a data provider, but are they charging anything from the client? Very likely no. So do you still want to call it a business even if there is no revenue? That's one important question that starts emerging, right? And that is something which is addressed by Ind AS 103. Okay. So any form of mergers or acquisitions that you would have heard of, you would have come across, you have dealt with, you have read about, the accounting thereof, right, is first understood or dealt with under the provisions of Ind AS 103. Okay. So what are those questions that start coming in when you acquire a business? Okay. You would probably talk about assigning a value to that business. Okay. You would start talking about what is the consideration that you want to pay when you acquire that business, right? It could be a premium, for example, and thereby you start looking at the word goodwill, right? You've heard this term goodwill under Ind AS 36 specifically when we dealt with the impairment requirements of Ind AS 36, right? Where we said that goodwill allocation is being done and any impairment loss is first charged to goodwill. So the goodwill is originated under Ind AS 103. Okay. And it could be also, by the way, a negative goodwill. We use a different term, by the way, to talk about that specifically, right? So these parameters to start with is something which is addressed by Ind AS 103. All right. Now, if I have acquired a business and I call it a business combination, right? And there's an extensive, detailed discussion around it as a part of this standard, right? The second step that starts coming in, or the other step that starts coming in, is consolidation of the financial statements of the entities. Okay. As I said, there is a business of, or there is a financial statement of Facebook, as in our example, versus the financial statements of WhatsApp. At a group level, at a consolidated level, they need to be brought together as a single accounting entity, right? All these provisions are dealt with under Ind AS 110. Okay. So while 103, Ind AS 103 would talk about a business combination, okay, and multiple elements involved in that entire process of business combinations or acquisitions, as we want to use the term. Ind AS 110 would talk about the consolidation of the numbers, right? So Ind AS 110 is more towards the accounting side of that. All right, it's all about the reporting front and the accounting front of the two separate entities when they are consolidated together. All right, but then when you say that two businesses are working together, when two businesses are working together, it is not necessary that there is an acquisition itself. It is not necessary always that one company will go and acquire another company. All right, one company will take over another company. It could also be an arrangement where they agree to work together under something called as a joint arrangement. Okay, it's kind of a partnership between two large companies, for example. Okay, so those aspects are, for example, dealt with under Ind AS 111, that is joint arrangements. Okay, now again, that is something which is again a different standard as we list it here, and it has its own set of requirements for recognition, for measurement, for disclosures, and everything. All right, but then there is another piece where you are saying that you are acquiring stake in another business, but you don't really run that business. You don't really operate that business in the capacity of a parent or an owner. Okay, but you do have a sufficient stake that you can create an influence as far as the operating activities or operating policies or decision making of that business is concerned. Okay, so we start looking at it from a perspective that you are investing in the shares of another entity. You are buying some stake in another entity. It's not a small stake, but it is not a stake large enough to to give you the power to operate the business, to run that business. It stays somewhere in the middle where you are able to influence the decision making of that other business, and that is where Ind AS 28, right, investment in associates and joint ventures, starts taking a role per se, right? And all in all, while we talked about a business combination which results in, for example, consolidation of financial statements of entities, under a business combination you would hear these terms: a parent subsidiary relationship, for example, right? But then the parent, Facebook in our example, for that matter, on its own is also a business or an entity at a standalone basis. Okay, so how should Facebook be reporting its own financial statements, right, is something covered within the perspective of separate financial statements, which is Ind AS 27, right? And finally, all the relevant disclosures are dealt with under Ind AS 112, right? I'm sure what we just discussed very briefly in the last 10-15 minutes is just giving an overview of what all we expect to talk throughout or over these different sets of standards. It's going to be very, very detailed discussion, right? That's what we want to do, of course, in the due course. But importantly, this is one area where, as a student, you need to be absolutely sure about every element, because this is something which is necessarily tested by the examination, right? And it's a large section of the examination which is testing you on group adjustments or consolidated financial statements or business combinations or joint arrangements or investment in associates or whatever name you want to give. All right. So what we expect to do in this particular discussions to start with, Ind AS 103, the first thing itself that we want to start talking about is look at various terms that we use, for example, under business combinations. For example, what is the meaning of business itself, right? We really want to spend considerable time talking about it, because as a concept, it can be a critical question for somebody to appreciate and connect with, right? Unless there is a business being acquired, there cannot be a business combination. Okay. And once that aspect is understood, you start doing the accounting, which in itself involves multiple steps. For example, who's the acquirer? In real life, it can be really difficult sometimes to know which company is acquiring which company. Right? Who's the acquirer actually? Who's the parent company person? It can be really a difficult question sometimes, right? In your examinations also, you would come across some scenarios where you find it troubling, but that's something which you need to understand. Okay, who's acquiring is the question. When is the acquisition being done is another question. That is something which again comes as a step or as a part of the conversation, right? And then what are you acquiring? What are those assets and liabilities that you are acquiring, for example, under that business combination? And finally, how do you measure goodwill or a negative goodwill called as bargain purchase? And that includes also the accounting thereof. Okay. Similarly, there could be also some disclosure needs to be made as far as the business combinations are concerned. They're all being dealt with in detail as a part of this conversation. All right. I certainly wanted you to be knowing it at this point in time, that in the totalities perspective, in the overall, schema of things at a group level, right, including all these standards combined, this topic is heavily tested, as you would observe. In the new syllabus, it has been tested for at least 20 marks and up to 35 marks. In the old syllabus, it has even gone up to 42% of your entire syllabus. So you can imagine the value that you want to attach, from, let's say, from the coverage of this particular topic, right? We would be spending a lot of time talking about all these concepts, trying to be absolutely comfortable for each of these concepts. And that's where all these sections would be divided into multiple subsections, so that our understanding of these concepts is absolute. We are very comfortable with all the aspects under the group accounting, and ensure that we get the best score out of this topic, and of course the other topics as well, right? So that is where we want to kind of talk about this entire coverage of group accounting, including these multiple accounting standards under the Ind AS framework. All right, thank you very much.